Okay, gentlemen, we'll come back to you in a bit. For now, let me invite Raamdeo Agrawal, Joint MD of Motilal Oswal, who's with us. Raamdeo, good afternoon. Thanks a lot for inviting us once again to your beautiful office. It's really picturesque. Is the market as picturesque for you?
Yeah, it couldn't have been better. We have such fantastic run in terms of the build-up of domestic investors' confidence in the economy and whatever is the governance and the political setup right now, that even ahead of the earnings growth or whatever is to come in the future, the market is having full confidence. And one of the most redeeming features of this market is that in last, say, I'm there for last 35 years, yes. But I have seen the institutional investing happening in last 25 years, yes. Starting from 95 or so. But I have never seen DII, domestic yes. investors, asserting in a absolutely, unquestionable way the way they are doing it now. And we have seen it in 2003 to 2007, but this looks to be very different. Ahead of the earnings growth, the build-up which we are seeing, and absolutely relentless. Even the foreigners are kind of taking a back seat, and domestics are really ruling the roost.
But does it get scary beyond a point, Raamdeo? Because valuations have gone out of whack. Yeah. We are saying that this is basically a bit of a trust that retail investors have had on the market now. Is it getting a bit scary? You think the kind of money that's chasing equities now?
So every match is like a new cricket pitch, Yeah. Every pitch is different. So this is again a different pitch. You have to see. Investing is investing opportunities come in different colors and different kind of themes every point of time. Right now, clearly, the market is very narrow in terms of performance, yes. And money is pouring in. Hence, that particular segment is being chased by everybody. So clearly, to that extent, it is far more expensive than what we are used to seeing those companies. But probably we are getting very cheap. Like you could buy HDFC Bank in the growth stage between 96 to say 2002-03, when they were growing at 40-50%, you could buy it for 15-20 P multiple. Today, the 40-50% growth bank, not exactly same stature, but that type of bank, you'll not get it for less than 40 P. Now whether, clearly if you work it backward, you should have paid 100 P for HDFC Bank at that point of time, but you got it for 20 P. So, aligning with the new reality is what is the game in the market. But clearly, individual stocks might look expensive. Clearly, it looks expensive compared to the past. But if you look at the aggregate market cap to GDP, it is still less than 1. So I would think that excesses might be happening in particular this thing. And even if you see the corrections, like you look at the IT sector, look at the pharma sector, huge segments of the markets have been corrected deeply. So it's not that only excesses are happening. There's a deep corrections also.
The reason I ask you that is, your own personal wealth, of course, is now locked into this Motilal Oswal Focus 35 fund. And 5 or 6 stocks account for 81% of portfolio. You don't need to, you don't see the need to sort of change the portfolio around. The same HDFC Bank, the same IndusInd Bank, the same Eicher Motors, the same Maruti. And I've been asking you this question, I think practically, every time I meet you. But these stocks, at every level, they are making money for investors.
Yes.
So what's going so right for some of these stocks?
No, we are not looking at the performance. We are not looking at the stock performance. We are looking at the company performance. We are completely focused onto the company performance. So long as the company's quality of the franchise remains intact, the managements don't do funny things, and their growth is intact. And the valuations are not completely outlandish. If there is a 100 P multiple for HDFC Bank or something like that, I think we'll also take our own call. So long as it is
in HDFC Bank, you don't think are still expensive?
I think it is not outlandish, reasonably priced kind of a stock right now.
Okay.
In relation to the rest of the market, these are the stocks which are very reasonably priced. Because market itself is slightly heightened in terms of valuation very clearly. Because it's waiting for the earnings growth explosion to happen, which has not happened so far. So clearly, markets are always relative. And getting at 24-25 P multiple for almost same amount, same type of growth, maybe 20-22%, 23% growth, is fine. They are the dominant position companies. They have the huge market shares. and they are gaining market share.
Which is what I was asking. Can they keep adding more market share?
Yes. I mean, we can discuss HDFC Bank not just because of it is in the portfolio, but per se as a lead bank, it is the second largest market cap company with 4.5 lakh crores kind of market cap. But the way we think, I mean, I'm telling you the framework of how we think. I mean, whether we are right or wrong, only time will tell.
Yeah.
You know, but the way we think is that, see, there is a value migration on. I mean, one of the biggest value migration in India, where your state-owned banks, which were at the commanding heights in 95, they were literally 100% of the market share. Today they are about 65-70%, and the whole thing is struggling right now for the capital, for the NPA issues, for the business model, for the consolidation. Whole lot of things are happening, and it will happen. I mean, almost the time has come when things will happen, but yet it has not happened. So the entire 2/3 of the market share is shifting for the 1/3 of the share. So even if you have a 10, say 12 to 15%, at least one time nominal GDP or 2 times nominal GDP will be the growth rates. So if your nominal GDP grows at about 10-11%, still 20% will be the banking growth. And in that, you have the huge shift from the big chunk, glacier is melting to this 1/3 side. So I think you have a multi-year run. If SBI can be 22% market share of the entire nation, why HDFC Bank has to remain at 5-6% or 7%? Don't you see that kind of opportunity? I'm seeing only opportunity. Whether it will happen or not, how far they can run, how much competence they have, how much determination they have, only time will tell.
You know, so obviously, you know, as you said, you know, we're not discussing this only because you have large holdings in HDFC Bank. But do you think something similar could then play out with the other, you know, private sector banks as well? You recently had invested, of course, in RBL. You know, there are a couple of others which are emerging. You may not want to talk about it, but a couple of some small finance banks have also done well. Do you think that will percolate down to some of these banks as well?
It all depends on the management team's determination and their own, you know, pig-headedness. You know, that determination to execute what is the game plan. You know, how much vision they have and how much they are determined to realize the vision. You know, and the vision of, say, HDFC Bank was very clear in '96 itself.
Yeah.
If you see the CEO, you know, I mean, they have one CEO for last 20 years, 22 years, and it still is continuing.
Yes.
So he's the one-man army who kind of built it across on the great brand equity of HDFC, and of course advised by all the, you know, Mr. Parekh and all of them. So you know, it's a confluence of events that this kind of companies come up. Yes. So if there is another one which is, see, opportunity is there for 3 more HDFC banks to be created, clearly. Now which one that will be, that only time will tell.
Oh yes, that time will tell. By the way, the market is picking up more steam. Mid-caps in particular, index up about 1%. Raamdeo, your thoughts on how, you know, GST was implemented? There's some who are saying that is there near-term earnings risk? Is there a near-term earnings risk? And if yes, would that be a buying opportunity?
See, I'm not GST expert. I'm a chartered accountant, but I'm not a GST expert. And like,
Prime Minister had good words for chartered accountant. Right,
yes, so we'll talk about that. But you know, see, the issue is that I mean, for last 15-20 days, because now the GST became real. After that, we started meeting the companies which have a intense logistics and people for whom we have respect for their execution. You know, and which are truly pan-India. They have 15 plants, 20 plants, they have thousands of crores, they have market shares, they have respectable market cap. I mean, I have not come across any company which are not at awe and appreciation for the piece of legislation. I went to an automotive company in Delhi just last week, and he said it's a brilliant piece of legislation. And yes, he also talked about some difficulties among the, you know, the smaller say fabricators or something like that. But they are doing classes, they are helping everybody, and government is also responsive. I mean, they are responding by the minute, by the hour. So I think on the whole, at least for the corporate world, it's a fantastic piece of news, and it's a ultimate ease of doing business. Of course, there will be hiccups in the execution. I mean, we know when, I mean, closest I have seen is the dematting of the entire market. I mean, in 2003 when it was done, it was like a force, you know, suddenly it came. And a lot of brokers, I mean, a lot of clients were not prepared. The way right now clients are not prepared. And what happened was brokers were using their account to hold the shares of the clients. And it took almost a year for us to resolve all the reconciliations. 1 or 2 entries might be left even now, right? You know.
That was the start of a big bull market.
For the bull market. Then suddenly what happens is when this kind of ease of doing business happens, there is no paper. You have unlimited capacity.
Yes.
Like today, I mean, size of Motilal Oswal is bigger than any of the exchanges. Leave aside NSE. So, what happens is that, I remember, a broker, one guy could execute only 200 trades in 87 when we started the business. So, entire one membership, where I used to work, 6 guys used to go. So, 1200 transaction was the max capacity.
Yeah, but now, of course, you can do almost unlimited transactions.
We do maybe thousands of transactions.
Yes, exactly.
We literally cross 1 million transactions now. So, that's the kind of, it's a building block of big build-up in the economy. Not only ease of doing business, but you are preparing for something very long, run in the economy, and there will be difficulties in execution. But now this is something which you cannot walk back.
I take your point.
Yeah, so it's a digital tax, and I'm quite sure the people who are appreciating. And one guy came. Let me just give. One guy came and he said, if there are 10 guys in this country who knows GST, I'll be one of them. He said, and he said this is a brilliant piece.
Okay.
And I would take his word.
Oh yes, let's take that word. It's good for the country, of course. Raamdeo, a couple of more issues. Housing finance has done well. I think you have PNB Housing Finance as one of your investments. You're betting big on this. What's happening in this space?
I think, Anuj, we have discussed HDFC Bank, but I think individual stocks I would not like to
No, you would not like to discuss.
Yeah, because
PNB Housing is not the only stock which has done well. Indiabulls has also done well. LIC has also done well. I'm asking, is housing finance the big sector?
Housing, if you see, the opportunity is staggering. And now with the falling interest rates, the opportunity size becomes even bigger. Because when you buy a 15-20 years mortgage, the bulk of the thing is interest cost, not the principal. You pay 3, 4, 5 times of the originally borrowed money. That is when you are charging at 10-11%. But when you charge it 6-7%, if your mortgage comes down to 5-6%, 7%, I think we're talking about 8-8.5% now, the popular big segment. Now, if that comes down by 100-200 basis points, the kind of, you can live in 3 bedroom, you can live in 5 bedroom, you can live in large 5 bedrooms. So the ambition for a larger, bigger, better house is unlimited, even if you have the house. This is a country without houses. So, it's all question of affordability. So this is ultimate discretionary one can have.
Is discretionary the biggest bet then, you think, if this market is going to be driven by domestic flows? In that case, do you think discretionary consumption, which includes all aspects, housing, house improvement and everything, that remains the key theme to back, Raamdeo?
That definitely remains. One is that opportunity is there in India everywhere. Yeah. How is the competitive landscape? That we have to, whether there are 2 guys, there are 5 guys, and how the one which we are picking is competent to kind of harness that particular opportunity. So it's a very case specific. You cannot put in the data that, okay, these 20 sectors are discretionary, so let me buy across. You cannot do that. Say like in cars. Car is the ultimate discretionary. The moment you become competent to buy, you'd go and buy a car for your family. But in car industry, India has a very crazy kind of competitive setup. The first guy is 50%. On the road you go, out of 5 cars, 3 cars will be only one brand.
Yes.
Okay, where do you get? You tell me one country. Do you know how many cars China is making right now? In 2000, let me tell you one statistics. India was doing little more than what China was doing in cars. They were doing about 1 million, they were doing about 900,000 something. That was in 98, 99. Today, I was trying to see the study, let it be checked. 28 million is the last year's number for China.
And we are stuck at?
We are struggling with 3 million.
Wow. So
in next 10 years or 12 years, even if it is half of that,
yes,
and of that half remains with this guy, they need to put up a plant every year.
Okay, and Maruti as a stock has done well for you, Raamdeo. Last question then. Do you see this market then going on non-stop, Raamdeo? Because that's also not good. Like
nothing goes in a straight line.
Yeah.
Nothing goes in a straight line. I have seen my wealth.
Yes.
When I look back, 3 times I have 70% corrections.
Oh yes.
70%.
58% is the correction we had in 2009, 2008.
No, in 92 we had 70% correction.
Yeah, I don't remember those days. Of course, I was not in the market.
30 to 10, then 10 to 100, 100 to 30,
yes,
30 to 500, 500 to again 225.
Yes.
So nothing goes in straight line. Particularly when this kind of discussion comes, that can it go in a straight line?
Yes.
That is the time it breaks down.
Yeah.
So I think we should always be ready for a correction. Only thing, you should not be leveraged. So when you fall, only 1 or 2 legs should break. You should not be completely out of action.
Yes.
So there will be correction, and it's fun part of it.
Okay.
The real excitement is you cannot see the future. Yeah. And let's not try to see the future or predict the future. Nobody has been able to do it. But we can conduct ourselves. See, when the markets are irrational, unpredictable in the shorter run, we have to be very, very cautious and rational.
Okay, Raamdeo, I can go on and on, but we have positive time. So thank you so much for taking time out, and of course we'll keep talking off the record as well. But that's the view from Raamdeo Agrawal. Always bullish, but saying that don't be leveraged, but stay invested. Of course, nothing will move in linear manner, but extremely positive, and the domestic liquidity is here to stay. We'll take a break with the news that the market is at high point of the day, and the Nifty at 96.14. We'll be back with more on the other side.